everybody, I'm John Van Duzer, CPA and partner with James Warren Company, and I'm here with Elena Davis and Daniel Rocani, and we're here to give you another weekly Biden tax update. Got an exciting video here, and I say exciting, not a whole lot's been going on, but we're definitely going to break it down for you. So Elena, why don't you tell us what's going on in Congress?
All right, John, if I had to use one word to describe the progress that's been made, that would be gridlock. The legislature has failed to make any progress last week, and they're still trying to negotiate the passing of this $3.5 trillion bill. The evenly divided Senate needs the support of the entire Democratic Party, all 50 votes, to move this legislature forward. There are two senators who strongly oppose this. So, Joe Manchin and Senator Sinema strongly opposed this bill because of the price tag. Uh, Senator Manchin and Sanders directly meeting, try to work out the deal to try to move this forward. President Biden is also encouraging the Democratic Party and the opposing senators to quote unquote get on board to move this package. Last week we talked about the increasing thresholds for the new reporting for bank accounts. So we discussed that the proposal currently is to report the activity in bank accounts if the activity exceeds $600. So Treasury Secretary Yellen has expressed her strong support to increase that threshold to $10,000. And that would affect potentially accounts with aggregate activity during the year exceeding $10,000. Now, yes, that is a higher threshold, but it will still affect almost every household in America who pays rent, buys groceries, or receives paychecks. So we'll be closely monitoring the progress that is happening in this area and see if the Democratic Party will meet their internal deadline that they set for themselves at the end of the month, which Joe Manchin said that it's probably not likely that it will pass, but we will report back next week.
Yep, and we'll continue to keep you updated. And so Congress, you can see the horse trading going on as we're starting to soften or start to becoming more moderate on some of these proposals. And the dynamics there within the Senate are really interesting where, Sanders, for instance, ran an op-ed in West Virginia to apply pressure on Manchin. So I think what we'll see is continued pressure on the two holdouts and then moderating the bill as it moves forward to make it more palatable. So we'll definitely keep you informed. If you haven't checked out our previous videos, we have gone into a lot of detail on a lot of the proposals and the summaries. And so, our first video we did a few weeks ago, we went on a high level summary of all the proposals. The next video, we actually discussed, hey, here's the provisions that were kind of widely talked about, but didn't actually make it in the House Ways and Means bill. The next video, we talked about what planning could be done now in anticipation of that bill to make sure you don't miss out on estate taxes or other items around that. And then, like you talked about, Elena, last week we talked about that $600 reporting requirement and what that would mean and what implications that could have. So definitely check out our YouTube page and look at those videos, and there's a lot of good information there. As accountants, we celebrate October 15th every year because that's the official end of our tax season. That's the individual extended deadline. And so now we are in what we call planning season. So thought we could take just a few minutes and talk about what should you be thinking about and during planning season. And as you're rounding out the year, what sort of tax planning should be coming across your mind. So Daniel, maybe you could just spend a minute or two and walk us through what should you be thinking about now as we're rounding out this year.
Yes, now that October 15th is over, which I'm sure glad it is, there's still a lot of work to be done before the end of the year. There's a lot of tax planning. So things to think about while we're waiting on Congress is one of the good things about tax planning is it kind of helps you on your cash flow. So you're going to maybe have a huge tax bill coming up. You don't know. Tax planning can kind of help you figure out how much cash you need on hand so you can pay any taxes due. But there's also plenty of ways you can do to decrease how many taxes you owe at the end of the year. So probably one of the best tax credits out there is the R&D credit. If you're doing any kind of research and development, you might be eligible for this credit and you should definitely look into it. If you ever wonder why Amazon makes all that money and pays no taxes, it's the R&D credit. So just because they're getting it doesn't mean that you can't. You might still be eligible. So definitely a great credit to look into. Another one is the employee retention credit. This is a payroll credit. So if you've had any kind of significant drop in revenue, or if by government order you weren't able to um, be in business or work at 100%, you might be also eligible for this credit and get a nice little help there by paying less payroll taxes. And this is taken on your payroll tax return, not your income tax return. Qualified business income. This is another big credit that we've had the last couple of years. 20% basically deduction on any income you made. You want to make sure you're maxing this out. If you're over certain income thresholds, you got to make sure you have enough wages or unadjusted basis and acquisitions. So if you know you're going to have a lot of taxable income coming up, make sure you're having enough wages so you can get the full benefit of this deduction. Also, during the end of the year, we always recommend please look over your depreciation schedules, any tangible property, making sure there's any tax savings there, making sure that anything on that list is actually still active, shouldn't be disposed of. You might have a few deductions there, losses you can take on those if they're not in service anymore. And then also consider any purchases. So if you're contemplating purchases, especially large purchases, is it better to take it at the end of the year? Is it better to wait till next year? We kind of talked about this in our last meeting. Well, maybe it's even better to wait because taxes might be higher in the next year, so you might get a larger deduction on that large purchase. And then just last things to consider about is just, are there any hidden tax traps that you might need to plan? You might not know it, but your CPA might, right? Great time to reach out to them. And then of course, always estate planning. The best time to do estate planning was yesterday, but the second best time is today. So if you haven't done it already, start right now. And your CPA should know a good tax attorney or estate and tax attorney. If they don't, I promise you our firm does.
Yeah. Well, that's great, Daniel. Thank you for kind of running over that. So definitely, welcome to planning season. Look forward to rounding out this year. That's all the time we have for today, but continue to check in, and we're going to follow what's going on in Congress. And as soon as there's any substantive update, we're going to let you know. So thanks, guys.